Did you know that over 1 million mortgages are currently in forbearance due to COVID-19 as of the beginning of May 2020? This means that people are deferring to pay their mortgage on a later time. This is going to have a big impact in the market down the line. I'm going to tell you the reasons why. My name is Ariel Herrera, your fellow data scientist, and welcome to the AnalyticsAriel channel, where we bridge the content between technology and real estate. Don't forget to like this video and hit subscribe because we have a lot of great content coming up. So Fannie Mae already has 1 million mortgages in forbearance, and they think that number may double. What is forbearance? Forbearance is being able to postpone or defer paying your current payments to a later date. So for example, if you have a single family home in the suburbs and your mortgage is $1,500 a month, and you can't pay this mortgage for whatever reason, in this case due to COVID-19, you can actually defer to not pay it that current month and pay it at a later date. Now, what's pretty alarming is that this has gone up by a lot. As we see here, 7% of the portfolio of government-sponsored enterprise mortgages in forbearance. That's a lot of people. And why is this happening? Well, due to COVID-19, for those who may be watching at a future date, it's a virus that has really hit the U.S. pretty hard. And we have a lot of restrictions because of it. So we're not allowed to be 6 feet within one another because the virus can spread very easily. And in that case, a lot of establishments have been closed. So people who work in corporations have been working from home. Those who work in service industries such as tourism, restaurant businesses have actually been out of work entirely because these are seen as high-risk areas for people to cluster and actually get the virus and have it spread more quickly. So how has this impacted jobs? Well, as of April, the end of April, the U.S. job claims have climbed up to 3.8 million that last week, and in total, 30 million from this pandemic, 30 million people have had to go into unemployment. That's a lot of people. Okay, to put that into perspective, New York City has about 3.4 million people living in the city, and this is almost 4 times of New York. So imagine all those people out of work at once. The reason this is happening, example for restaurants, because I love restaurants. However, if you were to go into a restaurant in New York City, you could literally extend your left arm out and you'll be touching the table next to you. So you're very, very close to others in a public area. And because of this, the virus spreads faster. So people who are in the restaurant business are out of work, even in construction, because they've actually limited some construction. Luckily, though, in New Jersey, the parks just reopened. So that's a positive. But again, a lot of other areas are shut down. So we may see this number still climb. Luckily, we do see it trending downwards. But one of the things that has been spoken about is once this virus is over, will we see a rebound? Will all 30 million jobs be scooped right up? Probably not, right? There's going to be a lot of changes. Like I said previously, being able to extend your left arm and touch a table next to you, do you think that's going to be a thing after this pandemic? Probably not. The capacity of restaurants may be cut in half. Also, people going back into work. I know that in some of my earlier jobs, the whole style was an open floor, open space where you could literally see what everyone's doing and you can walk over to anyone and everyone's desks were joined together in one long table. That may no longer be a thing as well. So, and also companies are learning how to sustain themselves while having to let go of people. If they have 10 employees, will they hire all 10 back? They may only hire 3 of them back, maybe just the superstars. And I'm putting that in quotes. So this is not a quick thing, this 30 million people out of work. It can last a long time. And how does that affect us? It affects us by people not being able to pay their mortgages. So I really like this website Black Knight because they give some really good statistics around COVID-19, its effect on forbearance. So I'm just going to go down here, and as you can see, the split between different the government products. So Fannie Mae and Freddie Mac holds most of the forbearance. Then comes FHA, which is a more like restrictive or less restrictive way of being able to afford a mortgage. Usually you have a lower down payment, lower credit score, and that also they combine that with the veteran package too. And then we have other. So in total, this was at the end of April, 3.4 million loans in forbearance. And we could see split by each of these plans how that trend has looked. And in total, we have just seen that climb. So what are people doing who rent? Well, in this site, they're looking to analyze, will may rent be canceled? Can landlords even evict their tenants? So a lot of states have actually enabled laws that do not allow their landlords to evict any tenants during this crisis. And what's also occurring is if you look right here, nearly a third of U.S. apartment renters, 31%, did not pay their rent within the first week of April. It's a lot of people not paying their rent. I mean, how can you pay your rent when you're out of work? Even if you're receiving unemployment and receive a stimulus check, which was $1,200, depending on your previous tax returns, this still doesn't mean that it's enough. So $1,200 is very different in a city like New York versus in the Midwest, perhaps. In New York, a single studio could go for $3,000. So that stimulus check barely doesn't even cover a third of your rent, as well as probably the utilities. So there's a lot of people who can't afford. And how does this cascade down? Because we were talking about forbearance and we're talking about renters. Well, for one, how do renters repay? They have to make agreements with their landlords, and maybe they have to pay a lump sum at the end, or maybe their payments will get split. So say if they skip 1 month, which is $1,000 of rent, possibly the next 5 months they'll be paying $1,200. Or they may just be asked to pay, say, that full $1,000 the next period, which can put people at a crisis. And what happens to them if they can't pay? Well, then they can't pay at all, and then their landlords don't get any money. When the landlords don't get any money, they can't pay the mortgages. So contrary to popular belief, landlords aren't these rich people sitting on gold mines. Most of them aren't. They're like mom and pop businesses where they maybe own 1 to 4 rental units. And they are not in the position to pay the mortgages of 4 different properties at once fully without any support with renters, and probably paying their own personal home as well. So that's why this number is also pretty high, because it probably combines both those who own their own homes and then for renters that aren't paying and the landlords can't afford to pay that mortgage as well. So how are these forbearance loans going to be paid back? So there's been a lot of discussion of different ways that it could be paid back, and there hasn't been one conclusive thought that has been put together. But what we've seen is possibly a repayment plan. So this is going back to what I was saying, where it's your mortgage is $1,000 a month, and maybe you're gradually going to have your monthly payments increase to gradually pay that back. Or a payment deferral or modification where you maybe have only 10 years left to pay your loan and you've had forbearance for 4 months. So that 4 months is going to be applied to the very end of your loan, and maybe now your loan is 10 years and 4 months instead. Then lastly is modification of the loan entirely. And this may again extend the years of the loan. It may decrease the amount you pay for the loan in order for people to not foreclose, because foreclosures is a big expense for the banks that hold these loans, as they have all these homes in their portfolio that they have to get rid of, and it becomes a big mess, which is what happened in 2007, 2008. So time will tell what happens here, but from my analysis, I do not believe that people are going to be able to pay lump sums. So I'm glad that's not one of the top options here, to ask someone to pay at the end of the 4 months of forbearance, $4,000. That's where are they going to come up with that money? I do expect that there may be a lot of people who remain out of work. As we talked about, we're going to see a whole societal change. So those 30 million people, maybe only 20 million go back to work. Who knows? And these different ways to be able to pay back the mortgages, the options, still may not be enough, and it still may relay in foreclosures. So only time will tell, and I'll keep you in the loop as to what's the latest. So please hit subscribe to our AnalyticsAriel channel, and you're going to get a lot of awesome content on what's going on around COVID-19, the housing industry, and analytics in general. Thanks for watching.